No, Stocks 5150. Today I'm gonna do a quick little class. This quick little class rhymes is for a person who names rhymes with class. Yours. So here you go. We're gonna start. I'm trying to be brief, trying to be quick. You open up your platform, whatever platform you choose. Just gonna stick with candlesticks. I got this set on the 1 year. You can set this aggregation to whatever you want. You see, you can select the time frames. You got as low as 2 ticks. That's really quick for scalpers. 144, 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, 2 hour, 1 week, 1 month, 1 year, and then you can set a range or you can do it custom. We're gonna put it on a 1 month. No, we'll give it a year. Keep it on a year. Keep it simple. All right, so we're going to talk about this one candle right here. Over here to the right, first thing on your chart, on your platform, you should have to your right, on your axis, you should have the price. So this is the prices right here. Down at the bottom will be your time. This is your time axis right here. I like to keep my cursor, my mouse set with the crosshairs, so that way I can see the time and the price at the same time. I can see what time the price is and what time it is at the bottom. So you can see here I got it the date, January 2029. I'm all the way over there, and the price is 1900. That's what I'm predicting. That's gonna suck. I hope it's higher. But either way, stay in focus. The candles. Candles have just like a candle that you burn at your house. You have, well, first of all, let me say this. You got different types of candles also that you can use. You got candles, you got bars, line graphs, areas, but we use either Heinikaishi or the candle. That's most what most traders use. All right. You got hollow candles, etc. and stuff. It's up to you what you choose to use. But we're gonna keep it on the Heinikaishi. That's the one I like to use. I'm mispronouncing that, but it don't matter. So the candles. This part right here, this area that you see, is called the body of the candle. This part up here is a wick, a upper wick. This part here is a lower wick. All right. So just like a candle, you have the body of the candle and then you have the wick, the part that you burn. So think about this candle as a two-sided candle. Exactly what it is. You got a lower wick and an upper wick. All right. So within this candle, you got information. Over here in my legend, you can see we got OHLC. OHLC stands for the opening, the high, the low, and the close. So this gives you pertinent information that you need. So it tells you at what price, looking over to the right, it tells you what price that this candle opened at. It tells you the price where you see the C, what price the candle closed at. Okay, that's important. Then you got the high and the low, the H and the L. So the high of this candle was 26,232. The low was 16,859. All right. So that gives you information too. Now, what helps you with this wick? How do you trade this? If you look at a wick, if you look at this candle, you can see the candle beside it. It has a wick at the top, but a small, slight, basically non-existent wick at the bottom. All right. So what does that mean between these two candles? Because all candles are not created equally. So let's go here and do a 1 month. Bam. We got some different candles now, right? So we'll explain this. When you have candles that have the wick on the bottom, what that means is that the price went all the way down here because you know you have your upper and your lower. So the price of this candle went all the way down here to the lowest point, and then the buyers decided to buy the market and push it back up. Whenever you buy, you're being bullish or you're going long. That means you want the price to go higher. Whenever you sell, that's short and you want the price to go down. Here, this candle was going down, it went this low, and the buyers came in and started buying it back up. This is an auction all day, tug of war all day. So that's why you have the wicks at the bottom. If you see a wick at the bottom and it came up like this, that means that it could be a bullish sign, meaning that it's time to get ready to go long. And as you can see, the next candle that came, the market did turn around and start rising. Okay. Over here, conversely, we got this candle right here, which is a doji. These candles, stay away from. Don't trade dojis. I have my colors like yellow instead of red. This represents the same. This is bearish. You can change your colors. You can go to your settings on your platform and see my bullish bodies are green and my bearish bodies are yellow. And you see the dojis I have are white. Okay, so you can do what you want. But here with the doji, this is not a full doji, but you can see here there's a tug of war up here at the top where you got a wick at the top. What that means is that the price ran all the way up here, it got here, and the buyers got exhausted and gave up, and the sellers sold the price back down. You see? So basically, think about it like this: the market's going and people are buying it. They're selling, 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 and you got to have somebody over there buying it. So they buying it all the way up, and then they get here, and then they run out of air. It's nobody to buy. It's no more. It's an auction. You got to have somebody to do this. You got to have somebody to buy it. You got to have somebody to sell it. You got to have somebody. If you want to sell it, you got to have somebody to buy it. You can't have a market without both of these sides. Okay, that's number one. So yeah, it's cool for the market to continue to go up, but somebody got to be in agreement with you to think that this is a good price right here. If they don't believe that 26,110, the high of this candle, is a good price, then the market's going to sell back down until you run into an area where the price levels out and they're like, okay, we'll buy it here. That's kind of what happens with this candle. See, we get here, the market went up and it was like, nah, we don't like this price. So then it starts selling it back down into there. Next candle starts off and you can see it's a bearish candle. It's going down and it goes down, 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 down to this candle. Look, it gets this low right here. And then the buyers come in and they say, okay, 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 enough of this selling. And they start buying it and they bring it back up. Candle comes over. Matter of fact, let's look at this. The close on this candle was 25.95. The open on this candle is 21,262. See, so the open was higher than the low. So this one closed and then it opened up higher on the next candle because the buyers were still buying it. But they ran out of gas and it was going down. Again, sellers sell it down. It was going down. Buyers step back in, start buying it back up. And then this one, as you can see, it closed lower than what it opened at. Okay, that's why it's bearish. But the next step, because they were pushing it back up with that bottom wick, that's a bullish signal. Sometimes that bullish signal, and then that's boom, market start going up. When you have top wicks, that's a bearish signal. It's price and it's money there, but it's pushing the market, pushing it down. You see what I'm saying? So it's going up, but it pushes down. It's going up, pushes down, all the way up until it runs out of gas, or runs out of air, or no more sellers on the other side, no more buyers on the other side when the market depletes itself and then it falls. If we take this down to a 1 day, we can see how it goes. Let's see, let's switch this to candles. And you can see just like this. See this candle right here is going down, got a wick on the bottom, start buying it. Next candle is green, boom. Then this right here got a wick at the top. Next candle is yellow, going down. This right here, going up. See, and then the market just continues to go up. So long as there's somebody on the other end willing to buy what you're selling, as far as the price goes, the market will continue going up in either direction. Or is somebody over here you selling and it's somebody that's willing to buy it over here? That's how the market works. It's an auction. Think about it. You got to bid and you got to ask. So you got to bid for something, and that's actually a real thing. The bid and ask spread, that's up here. That's what that is. See, the bid and the ask. So the bid is what a person is selling, and the ask is when a person is buying. All this information is tied into the candles. All right. So again, with the candles, you have the body of the candle and you have the wicks of the candle. A wick at the bottom means that the price was going down and then the buyers bought it back up. A wick at the top means the price was going up and then the sellers sold it back down. Okay. That's that for the candles. And if it has no wick, they call that a marabuzu. What is that? Where, let me find one that doesn't have a wick. Here. This is close as I can. Oh, yeah, that's close as I can get without a wick right there. And that candle is a bullish candle. Yeah, 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 because it's green. And it has no wicks because the stock opened at its low and closed at its high. So that means that the buyers dominated the session. So see, even like when you see them like this, where they don't have wicks, You see the slight or small. That's what that is, okay? These candles are bullish, going up. All right, that means that's who dominated it. It could also be bearish, depending on who dominated it. All right, so that's it. And you got patterns that you can use with candlesticks and everything too, but I'm not going to talk about that because you got different types. You got hammers, you got shooting stars, you got spinning tops. That's a whole nother day, and we ain't even on that level right now. What we talking about is candlesticks. And again, you can use these and change the time no matter what time you choose. A 1 day, they represent that much time. This is on the 2 hour. Each one of these candles represent 2 hours. You see? If you put it on the 30 minute, each candle represents 30 minutes. Overall, you look at it and you can see the market is still going up. If you put it on a 1 minute, same thing. Each one of these candles represents 1 minute. Understand? That's all we need. That's all we got. You put it here. This represents tick size. 144 ticks is each one of these candles. Okay? Oh, look at that. We gap down. Mmm. That's nasty right there. And I think I might be in a position. Well, we'll see how it goes. Stocks 5150. That's it for the candles. And look at that. That's see it's moving right there, live action. Let's just watch that for a second. See who's going to win this auction. You got buyers and you got sellers. They're trying to push the price up. You see how the candle's going up? They're pushing it up. There it is. Pushing it up. They're buying it up. That means that it's somebody selling it and then it's somebody buying it. You see how that next candle turned yellow? That means it's somebody selling it. So now that wick's at the bottom, buyers are still pushing it up. Nope, sellers selling it down. It's a tug of war all day. What it did, I'm going to tell you something. When it gaps like that, most of the time it wants to fill that gap. No space usually gets left void. It doesn't happen like instantly all the time, but you see, now we came back and we're right here. We fill that level. So now you're going to meet, this is a whole nother thing, resistance, and more than likely this will turn around and go down. And you see, we got this indecision. We don't know what we want to do. See, there it is. It turned around because it meets resistance right there. All right. But that's it for candles, and that's all we're going to talk about. And you can see that we're moving in live action. You got a doji right there, didn't know what to do. See now, we got the wick at the bottom, pushed up a little bit, sold off. See what happens with this one. There you go. Pushing up, equal. And see what it's doing? It's bumping into this resistance right here where these candles bottomed out at. And it's going to have to break above that. It's going to have to get a candle to break out of that and go up higher. But that's a whole nother class. That's trading. Candles are important. You got the open, high, low, close, and the body. All right, stocks 5150. That's it for the candles. Sorry for all that rambling. Peace.